It has been quite interesting this week, all the stuff that took place, and there are certain things I just want to point them out because they are quite interesting, and we need to keep an eye on. First of all, you know that last week we had the intervention coming into the concerted intervention coming in, and this was the result of the intervention. You see those couple of days. This basically was the day that we had the intervention. And with that, and having Friday come in, I mean, basically everybody going into the weekend, usually nobody likes to take a position against the intervention. So if the intervention was selling the dollar, that is quite a surprising thing to have this kind of close on Friday for the dollar. That says that there is still solid buying coming into the dollar. They don't see that intervention to continue, or even with the intervention coming in, there's still a great deal of concern or a great deal of desire, if you will, to buy and hold the US dollar. So with that, if we look at some of the other currencies, regards to the weekly chart for the US dollar, as you can see, we are still, since we're still above the 76, 74, this is still, we are considered now in the beginning of a trend change for the dollar. This high, which is the 80.43, is now the key structural point for the US dollar. The 80.43 is the key structural point, and with that move up and having this kind of reaction only as a result of the intervention gives us that the bias for the US dollar is still to the upside, and we need to start looking at buying the US dollar. There is some contradiction. I'm pointing this out because there are some things that are really contradicting themselves, and we need to be aware of it. If you look at, let me finish the currencies, I'm going to show you the contradiction. So if we take the Australian dollar, as you can see, we had this push up in the Australian dollar. I mean, we tested the low based upon the index, and we had a good, solid, strong week to the upside with regards to the Australian dollar. But if you look at the daily chart, we were looking first at the weekly chart. This is the daily chart. And what we have here is a series of failures, if you will, or a series of lower highs followed with a failure. So right here, this is our first lower high, and that here is our first structural point, which is the 98.86, 98.71. Then we pushed above that, and as again you had the capitulation, a very nice capitulation. You turned back up again, and we placed in, pushed higher, and now we placed the second lower high. This is the second lower high. This is the first, this is the second. It's still lower than this one. And right here we have, this is the third push to the upside. And what we have in the last couple of days, even though we have a good solid move on the weekly chart for the Aussie, but this here, that is a sell signal. So right here, what we have now is a sell signal, and as you can see, if you're looking at the big picture for the Aussie dollar, yes, the trend is up, but now we're beginning to have the 3 consecutive failures, or the 3 consecutive lower highs, and the break of the third structural point for the Australian dollar, which is now this is the 96.33. This will be the major trend change, and we should be looking for the Aussie now to capitulate to the downside. Having said that, right now we do have, as I said, on the dollar we have a buy signal. This on the Aussie we have a sell signal. If you look at the British pound, the British pound is still in a major downtrend versus the US dollar. We have put our low over here, which is around the 135, and this has been now a sideways move, and we are looking again, we're getting a continuous weakness in the British pound, and we should be looking for further decline. So the pound is weak. We already have tested the 1757.63, and you will see that on the spot cash it actually has better price points. But now what we see right here is that the pound is weak, and we do have a selling point on the British pound. If you look at the euro, the euro closed the week at 134.04 based upon the index, and as you can see here, we had this intervention. That's the day of the intervention. Right there, that's the day of the intervention. And right now what we have here is a case of bad news, good news, bad action. We do have that the market has pushed higher, or the dollar failed to go down, and now it is flying. The euro now has failed, and right now we're closing the week at 134.04, and we have a structural point, which is a very important structural point, which is the 133.59. Which is basically this beginning point and this area over here. This is based upon the index. So because this was the upward point in the move to the upside, and then it failed, it came back and tested it again, and then it pushed higher. So right now we are sitting at a breaking point, which is the below, or around the one below, any trade below the 134. So the euro is now is a sell, and this is actually a very big sell signal, because with all the intervention that came in, the euro and the pound, none of them were able to muster any positive move for the week. If you look at the yen, as you all recall, we were shorting the yen from below the 129. That is our structural point. Now that move, this means that the yen wants to continue to the downside, and as of now, the one that's structurally weak, the one that looks the weakest, is the Japanese yen, and that will be the one, the primary one we need to be focusing on as from the short side. And this is our structural point. If you're going to be looking at it, this here, any trade based upon the index below the 127.78, we're looking for capitulation, because we got now several lower highs. That is the Swiss franc. And of course, as we have discussed, there is technically, looking at this chart, we are basically now setting for a big downward move. This here is your structure point. This is the beginning of a bear market with regards to the Swiss franc, because now you have a failure, you have a big momentum to the downside, and we're looking now for the next leg down for somewhere around here. Now the breaking of this point on the index, which is the 107.49, which is about 100 pips from now. That would be the technical break for the Swiss franc, and we should be looking for a major, massive decline below. So this is also a weak currency. So we're looking at the yen from a sell point, and we're looking for the Swiss franc from a sell. Last but not least is the Canadian dollar. The Canadian is still technically in an upward trend versus the US dollar, and as of now, based upon this, we might be looking for a little bit more decline in the US dollar versus the CAD. But if you look at the daily, what we have here is a short-term sell signal. We're looking for a push to the downside. It is not a trend change. The trend in the CAD dollar is still to the upside, and we have yet to break any structure point or to change the trend to the downside. So this is a major, is a minor sell signal, and we can be looking at taking short some CAD dollars for short-term trades. We'll not be looking to taking it for a long period of time. So if I'm going to, before I'm going to tell you which is the stronger week, I want you to take a quick picture, and then, so if you look at the Australian dollar, as I mentioned to you, we have a sell signal, we have a sequence of lower highs, so we should be looking for this to continue at least to test the 98.71, which is the old structure. Should test it, because now I'm getting, it should be going to the downside. The pound is also as weak, and we should be looking for a retest of the 153.85 level. The euro is kind of neutral, so I'm looking at a weakness I don't think so. No, I don't believe that. Everything with regards to the Aussie has already been discounted. There is no way in heaven. The only thing that will affect the Aussie if they raise the interest rate. But until then, there will be nobody's going to raise any interest rate in the near future anywhere in the globe. Even China brought down its interest rate. So there will be no, the Australian will not raise their interest rate, so the only thing they will do is either cut it or do nothing. And either outcome of those two moves will probably be a decline in the Aussie. Okay, now, so we're looking at going long the dollar, short the Japanese yen, short the Swiss franc. So we're looking at the dollar, short the Swiss, short the euro, short the pound, short the Aussie and the yen. We might be looking at taking the pound versus the yen, because the pound is weak, but it is not as weak as the yen, so I can take the pound yen. Another one I can be looking at, since the Aussie, I hope so, if the Aussie is kind of still didn't give us a sell signal, I can take it going long the Aussie and short the Swiss, and we're going to see how these, when we go to the individual charts, how they work. So I can be long the dollar, short the Swiss, I can be long the dollar, short the euro, I can be long the dollar, short the pound, and I can be long the dollar, short the Aussie and the yen. I can also take the pound yen, I can also take the Aussie Swiss, and if I choose, I can also take the pound Swiss, because the Swiss is weak and the pound is kind of decent, so I can take the pound Swiss. And I can take also the pound yen. Okay, now the one thing, as I said, that does not, that may confirm what I am discussing with you. There is something that confirms and something that doesn't confirm. So if we look at the S&P, which is the US stock market, you can see that, I don't know if this closes right, but in essence this way, that is, we have a tendency in the S&P, we have a seasonal tendency that the S&P will be going up towards the end of the year, and that's what we call the Christmas rally. We have traded above the structure point, which is this is based on the December, this is the 1251. So that confirms the, yes, that's the Standard & Poor. That confirms the strength in the dollar, because coming above the 1251 means that there is a lot of buying coming into the US stock market, and that is going to be supportive to the dollar, because if the stock market is going up, they need dollars to buy these stocks. Also, if you look at something else, and this is where I'm concerned, if you look at the crude oil, this technically, this currency, yes, it should, yes, anywhere above the 1251, Sajdi, if it gets above the 1251 based on the index, that's what you need to buy. That is your trigger, and the 1251 has been a historically powerful point for the US dollar, for the dollar, I'm sorry, for the S&P. So any move about that, you're looking for buying to come into the currency. But this is what I have a concern about, and this is where I'm going to call you this week for all of us to be cautious. So you take the trade and don't think that you're going to turn the trade into a long-term position. If you take a look at this here, this is a big uptrend in the crude oil. Basically, the system is long the crude oil since 85. It is now trading at 100. So basically, you're up $15 a barrel of oil since the last 3 weeks. And if you look at the last 3 days or 4 days right there, that was the day of the intervention. And with all what's happening and with all the talk that's coming in, an intervention against the US dollar and trying to push the US dollar down, you can see that the crude oil is grinding its way up every single day. It has an upward close 1, 2, 3, 4, 6 consecutive days in a row. Even that red negative day has a positive close above the previous daily low. So the way I can see that, the one thing that will keep this oil going up is dollar weakness. Because, or dollar strength, If the dollar is strong, then the crude oil should be coming down. If the dollar is weak, then the crude oil should be going up. So now we have the S&P and the crude giving two different indications. If you look at gold, looking at gold like this, yeah, you're still looking, but that is again a very weak close for gold. It is nothing to write home about. You don't really have a buy signal on gold. The same thing with silver. So there is something, some of the indices or some of the things that correlate and counter correlate with each other or not. Look at silver here. You have a major sell signal on the silver, and silver is a sell. You should be so the silver is a sell. The dollar, the gold is flat. Crude is going up, and the S&P is kind of flat. There are several contradicting things here, and therefore what that implies is that we should be careful, and when we take the trade we want to make sure now that if it moves between one structure point and the other, we need to make sure that we're not going to allow our position to stay what I'm trying to say is you're not going to turn a day trade into a position trade. That we don't have really yet a clear picture from there is something happening, and therefore we don't know what's happening. We just have to go with the flow. So for example, if you're going to buy crude, I'm just giving you this example. If you're going to buy crude, so you're going to put a tight stop, you're not gonna let it go. You're going to buy dollar, you're going to put a tight stop on it. So we're going to be using tight stops, and we're looking from a move from one structure point to the other. So just to wrap what what we're looking at. So we're looking at dollar strength. We're looking to be buying dollar, and we'll be looking at selling the Japanese yen, selling the Australian dollar, selling the British pound. The Canadian, we can be selling it, but we have to be careful with it. The euro, of course, is a sell, but we're waiting for a break. It is kind of now pegged with the intervention. And this is where we're going to be using our pairs. This is what, so we're looking at buying the dollar, and against the dollar we're looking at selling the Swiss, selling the British pound, selling the Aussie and the yen. For the British pound, you can take the pound yen, the pound Swiss, you can take the Aussie yen, you can take the Aussie Swiss, and I think the Aussie Swiss is actually better than the Aussie yen. So because I'm looking for selling in the Aussie is considered still a strong currency, and the Swiss is a strong currency. So taking the Aussie Swiss might be actually better for us. Then you can go along the Aussie and short the Swiss. Okay, so that's what we're going to do. So let me stop the recording and